I've got a secret for you. Candlestick patterns don't work. Hey everybody, and welcome to Douglas on Trading. Today we're going to talk about my top 3 reasons why candlestick patterns do not work. And stick around for number 3 because it's going to blow your mind. Now, when I say candlestick patterns, I don't mean typical price action support and resistance. I'm talking about things like these 3 bars, this doji next to this hammer bar, next to this little guy means you go long or you go short. Or this gravestone next to this inside bar means that you need to do this or that, okay? I'm not saying that the price is bounced off this level 4 times and that means it's no good. That's not what I'm saying. We're talking about specific little candlestick patterns, okay? You with me? Reason number 1 why candlestick patterns do not work is at best, candlestick patterns are only showing you what has happened in the past. They're only showing you what has happened. They can't show you what is coming next. Now, I'm not saying what has happened in the past is completely useless. We need to know areas of support and resistance, but you can see that by where a price peaks or levels out. A specific shape of a few candles in a row is not going to give you any sort of insight. For example, if you are looking at a high for the day, price has bounced off that high multiple times, you'll notice that sometimes it comes up, hits that high, drops immediately. Sometimes it comes up, bounces around in there, then drops. Sometimes it comes up, bounces around, then goes up, breaks through that level, and then crashes down. And the candlestick shapes, the candlestick patterns in that point in time, they're going to be all over the place. Now you can look back in hindsight and say, oh, this is the pattern that told me that I should have gone long or short here, but I'm guessing that when you do that, you are struggling mightily and has not been paying off for you. And if you stick around to reason number 3 here, you're really going to see what I'm talking about when I talk about specific individual candle shapes being almost of no use at all. All right? Reason number 2 why candlestick patterns do not work is candlestick shapes do not drive markets. Now that should sound obvious, but for some reason, we pretend that they do. But think about it. Why would the price of Apple go up and down based on a candlestick shape? Why would the value of Apple change based on the shape of a candlestick? It's not going to. Candlestick shapes do not drive markets in any way, even in the short term. All right? Stock market, futures market, forex market, all these markets are auctions. They're driven by supply and demand. All right? They're driven by buy and sell pressure. And if you still don't believe me, if you're screaming at your screen right now saying you're an idiot, you have no idea how to read a candlestick chart, think back to the pit traders of the old days before computers. Okay, they didn't have candlestick charts, they didn't have candlestick patterns. They were buying and selling based on what they felt the momentum of the market was in terms of buy and sell pressure, in terms of supply and demand, in terms of market sentiment. These are the things that have always driven markets and always will drive markets. Candlestick shapes are something that we give ourselves to make ourselves kind of feel better, that somehow we are gaining some special insight into the market. I mean, think back to the 20s. The stock market was still moving. It was working. Nobody had even heard of a candlestick chart back then, and the market still worked, all right? So the idea that a candlestick shape, a candlestick pattern is somehow driving the market or giving you an insight into where that market is going to go is somewhat ridiculous. I'm sorry. All right, reason number 3 why candlestick patterns don't work. This is the one you really need to pay attention to, because for some of you, it might blow your mind. And like all good things that blow our mind, it's actually quite simple. So what I'm going to do is I'm going to put up a little candlestick pattern of a 5-minute chart. So take a look at this little pattern. Get it in your mind, memorize it. Now we're going to look at a 5-minute and 30-second chart of the same pattern. All right, this is the same time period. It's just a 5-minute and 30-second bar instead of a 5-minute bar. And you will see a simple 30 seconds can absolutely change the supposed pattern that you thought you saw. Now let's take a look at a 10-minute chart. Completely changes again. All right, but the end result, let's look at the end result. The price went the same direction no matter what the candlestick pattern was looking like, right? Of course it does. Whether you're looking at a 5-minute, 5-minute and 30-second, 10-minute, 1 day, 1 week, of course the price went in the same direction on all of those charts. So my question here is, why do you think that your specific time period is special? Why do you think that your specific candle is special? Now you've got people that aren't even trading time charts. They're trading tick charts. They're trading volume charts, and they're all looking at the candles on those charts thinking that their specific candle somehow gives them a psychic sort of insight into where the market's going, and nobody else's candle looks the same. And if you want to take it a step further, different data feeds. So if you're using Rhythmic versus CQG versus whatever other data feed is out there, candlesticks can look different on different data feeds. So I hope you're getting my point that a specific candlestick shape or a short-term candlestick pattern, like you'll see the 3-bar play or whatever is one I see online a lot, they are mirages. There's nothing to them, all right? And for those of you that are still screaming at me, still calling me an idiot, still saying, you have no idea, you don't know how to read candlestick charts, you gotta use them in conjunction with this indicator or this support and resistance or whatever. I get it, but you're going to have to explain to me why your chosen candlestick, time frame, volume, tick, period, whatever it is, why your chosen candlestick is the one candlestick to rule them all. All right, so now that I've dashed many of your hopes and dreams about candlestick patterns and shapes, I'm sure the question was what the hell am I supposed to look at? Give me something. And that something, of course, is order flow. You need to start learning order flow. Order flow is actually looking at what's happening in real time of supply and demand, of price pressure, of volume, of everything that you think you're looking at in a candlestick chart, you actually see when you observe order flow. Now, I'm not telling you it's easy to read. I'm not telling you that you're going to know exactly where the market is going to go or that you're going to make $1 million. I'm not going to tell you any of those things, but what I am going to tell you is at least you'll actually see what's happening and not just tell yourself that you're seeing what's happening. Okay, so stick with me, stick with this channel. You'll start learning a little bit more about order flow. It is complicated. It is a little bit tougher than looking at a candle shape, but it's better, trust me. All right, so subscribe with me, people. Please subscribe, or just hit that like button if you already have subscribed. Leave comments below, yell at me, argue with me. I will argue back with you. And check out a couple of my other videos here. I'll have them pop up here somewhere with YouTube magic. Click on those, especially the risk reward breakdown video. If you haven't been paying attention to your risk and reward, is a great one to watch. All right, boys and girls, thank you and happy trading.